Hey, what is up, guys? This is Kenny, Senior Research Analyst with the MiniAnalyst.com. The first thing we're looking at here is a chart of the market, mini S&P 500 futures contract on the 7th day of January 2019, as the market is now at 2553.50 on a pretty impressive bounce back after going all the way down to right around 2300 from essentially 3000, so about a 700 point drop in the mini S&Ps. We've actually been content to kind of sit this one out in terms of our official market timing, our OMT. OMT, you can see we're bullish, and given the complete breakdown of the long-term measures of trend following significance as well as the horizontal significance in the market, we definitely wanted to go back to neutral. We did so on a bounce and just had these huge whipsaws. Here you see an inverse HNS get completely broken down, which led to the ultimate sell-off. We've now gotten a retracement back into some key shorter term measures of trend following significance. Could go all the way back to 2600 to 2650, which obviously has been this key measure of support and resistance. From 2600 to 2650, kind of been keying off of that, expecting that, but it did not hold. We're just now retesting from the underside. Will we go to bearish? Not particularly sure. Kind of still content to wait on the sidelines in terms of our discretionary OMT. That being said, our systems are certainly participating nicely, up $135,000 in current speak, as the boost is long. Several positions, four positions long in the boost. Double's got a few positions, crypto and Krypton. Marty even has some long exposure. Looks like Mace AI to buy, and looking at the intraday dynamics, they're looking pretty bullish. Had some bullishness on Friday, extreme bullishness, as you can see on Friday, led to a nice drift higher and an extension today. Today, of course, is the second day that we've seen up. We'll go back and look at the daily chart. One monstrous move up as this whole level was reversed. This retracement was reversed, closing a new high and a continuation. But again, we're just looking at some shorter term measures of trend, likely to make it back to around 2600 to 2650, which is about 100 points or so. So that would be a nice tradable move. But you're looking at a quick 100 points. The moves that we've seen, the volatility and the expansion of range that we've seen has just been utterly impressive. That being said, we can go ahead and look and see how our portfolios have done. If we look at the Platinum LR, which has nine trading models, essentially the Dubla, S&P System 1.0, Mace, Mo, Marty, Marty S, HW, Main, R30, and BHYM. So it's kind of a lower risk formulation. That being said, we can look at the return tables right over here, and we can see that the portfolio dropped in December $16,915. Now, of course, that's a percentage drawdown of about 2.5% on the equity curve, as you can see here. But overall, as much as the market has gotten slaughtered, this is a $100,000 portfolio consisting again of nine trading models. Overall, we just had a retracement to linear regression essentially. So if you can see, as soon as we get these retracements, these are fantastic opportunities to get involved in the exposure, and that's kind of what we're mentioning today, is getting involved with the new year in some of our trading models, which, as you can see, we've had this retracement, and what a great opportunity to get involved. Just a 17% of initial capital drawdown, and that's essentially about as bad as it gets. If you look over here, we have the maximum drawdown of $35,000. Obviously, it does get a little worse than the $16,000 loss that we had in December, but that's actually just a phenomenal opportunity. So we'll check back in about 3 months to see if this was, in fact, a phenomenal opportunity to get involved. So January, February, March, April 1st. Make a mental note, set in a reminder. Hey, how's the mini analyst doing? And it's MA Platinum LR, so you can actually participate in this. You go to the website, chat with Support Team Live, and say that you want to get involved with the $100,000 MA Platinum LR, and you can actually receive 50% off right now. So just shoot us an email to admin@MiniAnalyst.com, and that'll be for a whole year's subscription, obviously. So basically, you'll get that for $5,000, about $400 a month for this type of return, we can go ahead and look at the returns for the yearly. $50,000 in 2018, $63,000, and the fee, the subscription fee, is about 10% of that last year. Of course, this includes slippage and commissions. This is, of course, must stress, hypothetical, although these systems have been in development or have been live and developed at least 5 years ago. We do have to stress that they are hypothetical. Performance results and the subsequent disclaimers on our website. Go ahead and take a look at those, and of course in the email that you may be getting notified of this video is the disclaimer. So take a look at the disclaimers. Very risky is what we do. 10 to 20% of your total portfolio should be devoted to what we do, but the volatility is certainly there, and it's reminiscent of definitely in 2008, 7, 2002, 2011, and 2015 in market environment. Which are phenomenal environments. So go to the website, chat with support team live. Mention the half price Platinum LR for 2019. If you subscribe for a year to the portfolio, certainly you can trade your self. You can get text alerts to your cell phone, have it auto trade with a broker, or you can trade your personal account, trade a business account, or you can trade your IRA, whatever you're interested in doing. So hope this video has been informative, and we will see you next time.